Welcome to AM Best Audio.
Hawaii's homeowners insurance market is responding to catastrophic wildfires with sharp rate increases and strategic growth decisions by insurers navigating heightened catastrophic risk. I'm John Weber for AM Best Audio. Renee Kiriluk-Hill has been covering the situation in Hawaii for Best Wire and joins us now. So, Renee, what made Hawaii's homeowners market stand out to you as a story worth covering right now?
Aloha, John.
Aloha to you as well.
There were two things that made this a story. The first was change. We all know about the 2023 wildfires in Lahaina. They were a multi-billion-dollar loss for the industry in a state where wildfire wasn't considered a large risk. So by now, insurers have had time to digest their losses. They're evaluating their current risks. And I saw RLI. Now, RLI has written homeowners in Hawaii for decades, and they increased their market share since the fires. And they said they've been taking advantage of the disruption that the fires caused. I also saw that the state Hurricane Relief Fund was expanding to commercial residential property, so that also confirmed that the property market overall was changing.
So beyond the wildfires themselves, what factors are most responsible for the size of the rate increases insurers are pursuing right now?
Hawaii may be an island chain, but it's not immune to global economics. Insurers here were impacted by the economic inflation we saw everywhere when the COVID-19 pandemic upended supply chains. The labor market was exceptionally tight from 2022 through the first half of 2024, which increased labor costs. And property reinsurance rates, as we know, broadly rose anywhere there's a higher likelihood of catastrophic losses, not just in Hawaii. Now, layer on top of that Hawaii-specific costs. The cost of living is high, so labor for construction and auto repair costs more. The skilled labor pool is finite. Overhead is expensive, and commercial space is tight to store materials for builders. Now consider that Hawaii is thought to be the most isolated populated area in the world. It's about 2,400 miles from California. Repair and replacement materials are coming a long way. Add on that higher transportation cost, and with that, the enemy of claims, time. After the wildfires, there, of course, was demand surge. Hawaii may not have the hurricane exposure of a Florida or a Texas or Louisiana, but it's still there. Hawaii is the 8th smallest state by land area, yet it has the 4th longest coastline. Don't forget, the fire that destroyed much of Lahaina in 2023 was one of several large fires on Maui, where Lahaina is, or the Big Island, and they happened during a drought. Those fires were fanned by winds from Hurricane Dora passing far south of the island. The Big Island also has risk from volcanic activity. So it's not a surprise when we found that at least 20 homeowners riders were approved last year for rate hikes. They were overwhelmingly double-digit increases, and a couple were close to 32%.
Wow.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
And now, Renee, your reporting notes that some insurers are still looking to grow in Hawaii. Is there anything that distinguishes those carriers from the ones that are pulling back?
First, consider again that Hawaii wasn't a market for the faint of heart before the 2023 wildfires. And you see that when you look at the largest homeowners writers. State Farm had a little less than a third of the market share in 2024. Tokyo Marine was next, then Allstate, USAA, After tourism, the military is the second largest industry in the state, and RLI. They're large, they're experienced, but as climate related risks rise, they're going to protect their bottom lines by taking a closer look at what they underwrite, the same as they do in any other cat prone area. So that comes across in concentration of risk, exposure to a peril. For instance, how close is too close to a coastline? Or how close is too close to dedicated open space now that droughts are increasing? Insurers hiked rates enough that some are comfortable with the risk on their books now, like RLI. RLI's chief operating officer, Jen Klobnak, recently said double-digit rate increases and a couple of book rollovers assumed after the Maui fires helped premiums there rise 26% last year. On the other hand, MS&AD subsidiary and Hawaii-only property casualty writer DTRIC is transitioning to runoff even after raising homeowners rates 31.2% last year.
So, Renee, what does Hawaii suggest about where homeowners insurance markets in other cat-exposed states might be headed?
As we've seen in a multitude of states, rates are rising. Insurers are paying close attention to that concentration of risk and individual property risk before they take on new business or even renew what they already have. Hawaii confirms that the catastrophic risk might not be the only one. So I think insurers are looking more closely at multiple catastrophe risks, especially with severe storms rising and with the overlapping losses, say with hurricane in Gulf Coast states or wildfire in a state like Colorado. A few years ago, the industry had large losses from a deep freeze, particularly in Texas. This year, we've had large winter storms and a brutal extended freeze in many states, but the losses so far don't seem as bad. So whether it was Hawaii with the wildfire or Texas with the deep freeze, each time there's an outlier event, we get better about mitigating risk. Technology and science is helping us with sensors, with home hardening, with smart landscaping, all of them reducing risk. So I think Hawaii suggests that homeowners insurers can come back from an unexpected catastrophe.
Great piece of reporting. Renee, thanks for speaking with us.
Mahalo, John.
That was Renee Kiriluk-Hill reporting for Best Wire. And I'm John Weber for I Am Best Audio. Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.